We have reached a pivotal moment in the stock market. I'm going to be going over exactly what you need to know before Monday's stock market open. The Fear and Volatility Index has officially went below the $15 level, and I'll show you exactly why that's such an important news event and why I actually shored up over 6 figures in cash today in the portfolio. I'm also going to talk about one stock that I completely sold off and one that I added that's brand new to the portfolio. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now let's dive into the portfolio. As you can see, new all-time highs. And if you do want to follow me on my 8-figure journey, go ahead and hit that subscribe button down below. And if you get any value out of this video, please hit the thumbs up button. I really appreciate that. So I do want to dive into my realized gain loss for transparency purposes, because some people are interested in, they said, hey, how much have you made this year? So we're going to dive into it today. A little gain from some Tesla covered calls, but we're going to go to the year to date in the portfolio. And as you can see, this is what I've cleared year to date. So 252K, obviously results vary year to year, but I'm hitting my goals this year a little over 20% so far. So we're on that 40% goal, okay? On track to that 40% goal. Now, I'm not the only one doing it. As you can see here in Options Trading University, we have clients sharing their inspiration as well. As you can see, Hector here, this is a newer member that just joined, right? Sharing inspiration every single day. And it's great to see that, people are applying the principles and really hitting some wins here. So obviously results vary based off account size and risk tolerance, but I just wanted to show you that this is truly possible with the right system in place. So let's go ahead and dive into it. Now, if you do want access to that, that will be at the top of the description, where you can watch this free training here and even see some of our client testimonials that I post weekly. And you could book a call with me or one of my team members if you want to work directly with me. Also, I do give away free trade ideas here on my Instagram and my free newsletter, which are also both down in the description to those. So make sure to be subscribed to those. Now let's dive into it. So next week may be a volatile week. We have a lot of things on the economic calendar. As you can see, GDP, FOMC interest rate decision, and ADP employment all in one day on Wednesday, okay? We have initial jobless claims, producer consumption expenditure, and US unemployment report on Thursday and Friday. So some volatile economic data that might be coming in, as well as earnings. So to this video, I'm going to also talk about Robinhood, which is earnings on Wednesday, and I'm going to talk about SOFI, which is earnings on Tuesday before market open. I'm going to go over some specific trades that I'm placing on those, so stay tuned. Now, if we take a look at the CME FedWatch tool, this is just showing us how many interest rate cuts are being priced in the future. We could see that there's 1, 2, 3, 4, 5, 6 interest rate cuts being priced in, and maybe even a 7th one at the end of next year. So that is good for the markets, obviously. Cheaper money means businesses can borrow at cheaper rates, consumers can borrow at cheaper rates and spend more. So as you can see, QQQ just hit a new all-time high today, 566. We closed in the market. And next week, okay, now that we see the VIX at 1492, this is the Fear and Volatility Index, okay? Once we see this thing get below 15, that's really when I start shoring up cash according to my VIX cash allocation levels. Now let's take a look at those. As you can see, we have moved from slight fear, VIX 15 to 20, to VIX 12 to 15. Now this tells me I could have 20 to 60% of my cash allocated, or 40 to 80% of cash on the sidelines. Now, I'm super aggressive, okay? Right now, I currently just cashed up, so I have about 22% in cash, so I'm very, very aggressive. But as VIX gets closer to this 12 area, if we do even get there before we have a nice pullback in the markets, I will definitely be 30, 40, maybe even 50% in cash on the sideline. So now I am starting to shore up that cash. But again, if we look at the markets, next week could be a nice gap up, okay? We might actually see if Apple has positive earnings, Microsoft has positive earnings, Meta has positive earnings. If those 3 companies do well, we could see a gap up, okay? And this is where I'm projecting it to go. We could see a gap up all the way to 580, maybe even somewhere in between 580 and 590, okay? 4% from here, which wouldn't be far-fetched. it would definitely be a stretch. And at that point, if we did do that, I do see the markets coming back down. Okay, so I'm going to draw it out. This is kind of where I see it going. If all three of those companies have positive earnings, we are probably going to head up here, and then we're going to kind of fall back down in range, and that might even create some more momentum on the downside and potentially hit this 560 level. All right, I don't see a downturn coming much lower than that because obviously hedge funds and institutions aren't even all in right now. They're actually on the sidelines, so that would give them a good entry to ride this market up. So that could be a possibility. But let's just say that Apple, Microsoft, and Meta have bad earnings, right? Then potentially we could roll over fast to that 550 area where we will potentially bounce back up. So I'm kind of playing the more bullish side. Obviously, I am shoring up cash, but I do have a lot of positions on it. I'm very aggressive because I think that Apple, Meta, and Microsoft are going to have positive earnings, and this, the market will start picking up quite a bit. So that's kind of my take there on the markets. Let's go ahead and get into the specific stock. So let's talk about Robinhood. All right, Robinhood has had a nice little pullback from all-time highs. Okay. We pulled back from this 113 area. Now we're trading about 7% lower at this 104 area. All right, we pulled back all the way down to 98 this week briefly, but that got bought up. So, this thing's kind of just trading in a range. All right, now if we take a look at the portfolio, I'm going to talk about a specific trade that I personally would take on this stock to play earnings because I'm long-term bullish on Robinhood. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Only results may vary. But if we take a look at the portfolio, okay, my current HOOD position is very, very large. In fact, I think it's one of the largest positions in the portfolio. Yes, it is, right next to SOFI. So we have 132K in cash secured puts, all right? But I have all puts at the 88 level. Now that's kind of where I'm comfortable being because if you go to the options chain and we go to earnings week, the projected move is about plus or minus $10. So we could head down to 95 from here or up to 115, okay? Now I think that, I think Robinhood could head higher, but I think it's going to be kind of a blow off top situation, kind of like we saw on Google, which we'll get into, but I think this thing could potentially, double top right here at the 113 again and then head back down, okay? I think this thing has just went up a little bit too far and it needs, some healthy consolidation. I'm very bullish on Robinhood, okay? I'm not saying it's going to go down, but, I wanted to position myself kind of at a safer place just in case they do report earnings that are lackluster. I would basically be getting the stock at 88, which from here, okay, would be, a 15% discount. And from all-time highs, that would be a 22% discount, okay? You don't have to be as safe as me, but I feel comfortable getting assigned to 88. But let's go ahead and kind of, if I were to do a trade just for earnings, right? I'd play earnings week. There's a lot of volatility, implied volatility in the options. And there's some good premium to collect there. So what I personally would do, okay, is I would go probably right outside the expected range. So if this stock could go down to 95, I'd probably go, to 95, right? Right at that expected range. And that actually looks good. That's an 18 delta. I'd pick up 1.45% in 7 days. Obviously, that's not guaranteed because these numbers fluctuate as the stock moves. So by the time Monday opens, they might be different. But I'd pick up $1.35 per contract, 1.45%, right? And I would feel safe kind of at that level getting assigned right outside of that expected move, okay? So if we go to Robinhood, if I were to see, okay, if it did go down to 95 after earnings, right, that would be basically a 9% discount from here, 9.3%. That's pretty good, right? That's pretty good. And then from all-time highs, that would be, a good 15, 16%. So not bad. And I think that is a pretty risk averse play there. Obviously, if I wanted to get more time on this thing, I'd go all the way out to the end of August. All right. And I'd probably go to the same strike. I go to 95, which is a 26 delta, and pick up 3.91% in just over 30 days. Obviously, results aren't guaranteed. These numbers fluctuate, but I feel safe there, 3.9. and that's a very, very safe strike in my opinion. Okay, so that's going to be the play for Robinhood. And if it did pull back there too, if it did pull back down to 95, that would be a good leaps opportunity play, which I'll talk about in the future after earnings. But for right now, just keep an eye on that $95 level because that's what the market makers are potentially pricing in. It could go down to. Okay, so that's Robinhood. So far, the great valuation on the stock. It's definitely not overvalued by any means, and good profit margins on the stock. So let's talk about SOFI because that's the next biggest position in the portfolio going into earnings. SOFI is finally seeing some consolidation here. I actually think SOFI is going to be not more bearish, but I think it has a higher probability of coming down, okay, rather than Robinhood. Robinhood has had kind of a steady uptrend, and it's following this line right here, this nice little trend line, and kind of, around this middle Bollinger Band. But SOFI is far from the middle Bollinger Band. It kind of had this parabolic rise, okay, and it's still, or it just went briefly under the overbought area on the RSI, okay? And MACD crossed bearish back on the July 18th, okay? So what I think is gonna happen here, and if we go to let's go to the portfolio, and I'll show you kind of my position, okay? I have 138K in cash secured puts, all right? I have, I think 18 and a half puts, okay? To collect 1975. Now, if we go to the options chain, all right, and I wanted to play this kind of just get out to the end of August, kind of that 30 to 35 day range, okay? I'd go out here and I'd probably go to the, actually I want to see during earnings what's the expected move. So expected move is $2.20. So it could potentially go down to $19. All right. And at that point, I'd want to get a sign because that's a pretty big pullback, right? So I'd go to the 19 strike, all right, pick up 3.6% ROI for the month of August. Obviously, results vary, but 65 cents per contract. I feel safe there, all right? And I would be, let's just go to the chart and see if this stock went down to the 19 level, that would be a huge discount, right? 10% from current levels and from all-time highs. 16%, okay? So I'd feel safe, super safe at that level. I feel comfortable getting assigned at 19 and then riding this thing back up, okay? That would also be an opportunity for a leaps play, okay? So that's kind of my projection on SOFI. After earnings, I mean, I guess it could go up $2 from here, which would put it at a new all-time high. It would be like 23.20-ish, 23.40, okay? And that's possible too, but I'm going to say the probabilities of SOFI going up there is lower than it actually going down and people profit taking. But again, this thing could have a similar situation where it spikes up and then kind of sells off, okay, and fizzles off. And I think that's probably the highest probability there. So let's go ahead and talk about a stock that I actually got rid of, okay, today. In fact, it cleared up about $91,000 in cash for me, 92K, all right? So I have 500 shares of Google that I got assigned during the stock market crash at 188 and 190. Those are all getting called away today. I'm officially getting rid of my Google position, and I'm gonna talk about why. Not because I'm bearish Google, I'm just more bullish another stock. So if we look at Google, okay, Google has not even, recovered back to its all-time highs. It's been kind of a laggard here. It's been a little bit slow and choppy, and it finally's picked up, okay? And I finally got those shares called away, and that's fine. But I think, the PE ratio is very low on the stock, but I don't think the growth of this stock is gonna be as fast as Meta, okay? As far as artificial intelligence goes, Google hasn't been really vocal in public about what they're working on, like as vocal as Meta has been, but I think Meta has the platform to actually come out with artificial general intelligence first. Yes, Google has YouTube, and that's very powerful. People are searching on Google search, people are searching on YouTube and watching specific long form videos. But okay, I think that Meta has the faster potential to create artificial general intelligence, which means creating an AI that can do pretty much any task. Okay, like it could create videos, it could create images, it could also be a chat GPT, right? Versus the AIs that we have now are very specific to a certain task, right? So the reason I think that is because number one, all right, let's actually just dive into the fundamentals of the stock because that's the first thing I look at. Yes, PE ratio is 27, Google's 20. So PE ratio is higher, but if you look at profit margins, we have net profit margins last quarter, 39%, cash on hand, 28 billion versus Google, okay, is profit margin 29%, so 10% less and less cash by about almost 10 billion, okay? I like companies with more cash on hand, higher profit margins. So from that stance alone, I'm going to trade Meta. I believe there is more room to make more money here on Meta stock, okay? Now Meta, they enticed an Apple AI executive with a $200 million pay package, okay? This happened a couple weeks ago. But basically they are trying to poach top executives at OpenAI, Apple, and other big companies to build its new superintelligence AI division. Okay, they are trying to create artificial general intelligence first. That will give them monopolistic like power as far as a company goes. Okay, so, and I believe they have the power to do that because of Instagram. And the reason why I say that is because if you haven't noticed on Instagram Reels, they are classifying search topics on Instagram Reels. If you post in Instagram Reels, it's going to classify your topic, and people are watching content much faster at a faster pace. They're searching, they're clicking on this and that. So it is feeding the AI with, I believe, way more data than a long form YouTube video like you're watching right now. So it's a weird theory that I have, but that's also a catalyst that the reason why I'm switching over. So if you look at Meta stock, okay, nice pullback here. I'm going to be selling a cash secured put potentially for earnings. So let's go ahead and dive into that. Now, if we look at Google, okay, just to compare the premiums as well. All right, two great companies, but if I had to choose one, I choose Meta now because if you go out to August 29th and you go to a, let's just say 28 delta, that's paying out 1.6% ROI, right? Obviously results vary. But if you go to Meta, okay, and you go out to August 29th and you go to, let's just go to, a similar delta. Let's go 27 delta. That's paying out 2.1%. So almost, a 0.7% difference in the same delta of cash secured put. So I like this return profile better for my goals, right? So that's what I'm going to be doing. I'm most likely going to be either selling in August 29th, 680 cash secured put, collecting 2.31%. Obviously results vary because the stock price varies, or I'm gonna go to earnings and I'm gonna try to pick up, maybe I'll go to 685 or maybe 687 and a half, pick up $1,000, 1.5% in 7 days. Results vary on that. But that is, I'm fine getting a sign there. Okay. 687 and a half. If we go to the stock is going to be, let's grab this line right here. Okay. 687 and a half would be right here. And if the stock came down there, that would be about a 3.6% discount from current prices and from all-time high, about 8% dip, okay? On a blue chip company that may create artificial general intelligence first, and I wouldn't put it past Mark Zuckerberg to get there first, okay? So that's just my thesis, and I really like Meta, so I will be getting all those shares called away on Google, and I will be replacing it with a Meta position next week. So I hope you enjoyed this video. If you want to continue seeing these updates, please give this a thumbs up, and I'll see you in the next one. Take care.